Hello everybody, how are you doing? Welcome to your webinar WoW Trades. My name is Alberto Alvarado. Let's begin. Well, if you're already familiar with the format of the webinars, you already know that I always like to start the webinars describing me and describing my background a little bit because I always think that it's very important that you always know at least some parts of the background of the person that is in front telling you something about the markets. So again, my name is Alberto Alvarado. I am broadcasting from Mexico City. I am Mexican. I was born in Mexico. I have more than 11 years of experience trading the financial markets. I started in 2005. I lost my first live account in 1 month. It was a $10,000 account, real money. So it was very painful. But after that, I realized that the markets were the something that really passionated me and that I really wanted to dedicate my life to them. So I decided to take my self-education seriously, and after 2 years, I started receiving the first rewards of my efforts, just to see my account again evaporate in the crisis of 2007. I had to decide whether to leave it or continue at a very high personal cost, and I decided to continue. But the 2008 crisis made me realize that what I thought it was my edge was not complete. So I decided to integrate emotional, subjective, intuitional elements to my trading. And they ended up working very well for me. Besides that, I, of course, use traditional things like fundamental analysis, only being aware of what is happening in the fundamental world. I don't hold any kind of very high economics degrees or something. No, I simply keep up with the news. I know what is happening. I read an analysis, etc. So I keep up with that. I use traditional technical tools like Bollinger Bands, stochastics, MACD, RSI. Nothing fancy, nothing that I pay for. And plus my edge, that is my intuitional elements, etc., is what you see here. The conclusions is what you see here. And well, my objective is to help you to generate your very own personal ideas on trading. Well, for the ones that haven't subscribed to my YouTube channel, I strongly suggest you to do so, because as you have realized, if you were around last week and yesterday in my Spanish webinar, you have realized that the webinar has become very active in the trading side, because since Donald Trump was elected even before due to Brexit, then after all the uncertainty surrounding the American elections, etc., then Donald Trump being elected, etc., the market's really entering into a very hard way, a very hard mode to trade. That doesn't mean that there were not opportunities, but at least not for the webinar purposes opportunities that could allow me to explain in depth and to look forward maybe 2 or 3 weeks ahead in time what I see, what I do, because it had no sense just to, for example, explain you an insight and 12 hours later the complete insight was over, because that is another kind of trading that is not suitable for the ones that are starting. So since the markets apparently are way more comfortable with Donald Trump's administration, the money should start flowing into the markets, and gradually the markets are entering into a risk on mode. So yeah, the most likely thing is that from now on the markets will behave normally, and we will find way more opportunities to talk about. And in any case, that is in between every webinar, it's necessary to update something that requires a video. You go to YouTube, you type this, IBB's Trading Rooms channel. This shows up and you click subscribe. And another important thing, whether you have a Google Plus account or not, that is not a problem. In Google, you will type this, Google Plus, as it is here, with this symbol, and you will type IBB straight in Google, in the search engine. You will click and it will show up a Plus Google account that is like a Facebook but for Google, and you open it, and if you don't have an account, just bookmark it, because there is where I could update some things that we talk about during the webinars. If they don't require a video, just maybe some lines, I will update there. So since, again, since the webinar will become much more active, it's recommendable that we have these bridges of communication. So if something happens, well, at least we don't have to wait for 1 week to know what is happening, etc. Okay. Well, today's agenda, we're going to review last week's trades on dollar yen. I am really happy, I must admit it, and you will realize why. I don't know how many of you were last week here, and I was sharing my insights on dollar yen, and well, apparently everything is going as planned. Today we have a very important fundamental release by the United States economy, that it was an amazing 62% above expectations. So this number pretty much put in a 100% chances that we will have, in fact, next week, a rate hike by the Fed. But not only that, apparently all these things that Donald Trump was trying to sell, the idea that everything was wrong with the American economy, well, I would like to ask him what kind of economy he is seeing, because these kind of numbers are really, really outstanding. I mean, having something 62% in your favor deviated is so hard to get when you're talking about the big fundamental things, and everything is aligning into that direction. So the thing that the markets are measuring now is not as if that if we're going to have a March Fed rate hike, because imagine, even if we don't have an outstanding number on Friday in the non-farm payroll number, or even if it's slightly lower, that wouldn't offset this kind of number. I mean, we should need to have maybe a non-farm payroll number lower than 50% of expectations to really debunk all this. So the most likely is that it's not going to happen. Every single data lately by the United States is showing that the Fed will not only continue with the rate hikes, but maybe they will be even more often than initially calculated. And maybe they're not going to be all 1/4 of a point. So the market is really hot now because it's really, the market doesn't want to miss this train. And this was accurately assessed and considered during my last week analysis, and we're going to analyze that, okay? Well, what you're seeing now here is the daily United States dollar Japanese yen. I was talking about yesterday in my Spanish webinar that I deliver once a month. The market was here, and I was commenting that this triangle was trying to be broken to the upside for quite a few days. I was commenting yesterday that for all the reasons that I just commented last week and now, that I believe that this should start moving up to the 115 and even further in the next months. Okay, that was yesterday, and today we have this. Why? I was explaining yesterday that this triangle in the dailies, even though the price was getting lower and lower, with the disadvantage of being just at the psychological level. Under normal circumstances, under normal trading circumstances, this should have been this should have dropped. But the thing is that we are not under normal circumstances. I have been always saying that trading is about context. Not everything is equal, and all depends on the context. And precisely having a breakout of a figure like this in the dailies happening under these circumstances usually means something. We were analyzing that last week, and apparently everything is moving in that direction. Okay, so well, yesterday I was commenting this, and this is just what we have today. This is the 4-hour chart. This is the same figure, but here is clearer. Sorry, this is the 4-hour chart. The market broke, started jumping here. The problem here is that we have a psychological level. So when you have a psychological level and a major descending line, usually what the market does is stabilize here and then drop. That is usually what happens. Again, context was indicating otherwise. So the market retested this, confirmed that this was a new support, confirmed it again yesterday, and here after this news, the market got to the 114.50. I was commenting during my yesterday's Spanish webinar that even though this figure is not as valid as it was supposed to be, because in technical analysis and chartist figure theory, the triple bottoms only work when they are at the bottom of a major trend, not in the 1 hour just at the top. But again, according to the context of everything happening, the way it was happening, in the moment it was happening, these kind of things are the ones that help us, the bulls, to feel confident of our insights. Because this is just one confirmation. At the end, it could happen that the price could have dropped. It could even do that. But the thing is that, as I've been saying in other webinars, being a trader is about becoming a detective of the financial markets. In order for you to be comfortable with a potential loss of a bad trade, the only way that you can feel comfortable of a loss is that you knew that you did everything right. Meaning, your analysis, you were patient, you gathered information, you were not operating under panic, under excessive confidence. Your decision was using your cold head, and that is what makes you a trader. Yesterday I was commenting something interesting in the Spanish webinar, that in order for you to call yourself a trader, you should be able to be proud of your losses. And actually you should be able to show them with emotion, with pride. Why? Because the thing of a trader is not if that you're going to be right or wrong. You will be right and you will be wrong several times during your trading career. That is not the difference. It's the reasons, it's the process behind your line of thinking before opening a trade that could allow you to actually show somebody your loss without fear of being criticized, or knowing that you failed to yourself not following your trading plan. So becoming a trader is becoming a detective. All the rationale, all the reasons that we analyzed last week during the webinar were reasons that I've been tracking for several weeks. So I felt comfortable sharing my insights here in front of you, what I do, what I believe, and my ideas, because I were tracking them. I knew I could be wrong. It would have not been any problem. When you are wrong and you're following a decent and correct money management, that shouldn't be a problem. But the thing is that actually opening a trade in front of people, exposing your reputation, if you're going to be right or wrong, well, this is why I tell you should be proud of your losses. If for some reason, imagine all the trades that we opened, well, not we, I opened, I don't know, besides that, if somebody decided to follow, you concluded the same, etc. But imagine that eventually all the trades became losses. The only way that I have to expose her and to learn from the losses is only if I have a clear idea why I opened them in the first place. Okay. So yesterday I was just commenting that this kind of stuff, the webinar happened here. Okay. More or less. Now look what it did even after. It dropped to the 113.70. If you're not sure of what you're doing, of your insights, and when you have this at the psychological level, where a major daily downtrend line is playing, this would spook you. This would even make you tremble and doubt of yourself. That doesn't mean that you cannot change your opinion, but one thing is to change your opinion based on data and facts, and another based on fear. If you saw this and you panicked and you changed your opinion, the most likely is that you were wrong. No matter what direction, no matter if your trade at the end ended up being correct or not. The thing is that you did it for the wrong reasons, under panic. And that's the worst enemy for a trader. Okay, so it's worth waiting. Look at this. We just got to the 114.70. So we're going to see how the trades we opened last week and yesterday are doing. Okay. As you see, my maximum loss, potential loss, if all these trades were closed in a loss, is 45.25. But actually, if I sell them all together now, I'm 50.20. So I am already in profit in all of them. All these trades are meant to be expired on the last day of March, as I explained last week. Okay, we'll check them quickly. The dollar, and why we're going to explain them? Because today I don't have any other trade to share. Because the trades to share need to be put before something happening, not after. So now the only remaining thing is to wait to see overall what the market does after non-farm payroll, to see if we hold these trades, if we increase them, if we close them in profit, or if we close them in loss, but that will be after non-farm payroll. Now, the only is to see how they are doing. This first trade that we're going to analyze, it said that payout if dollar yen, this is strictly higher than 114.50. As you can see here, we have the first retest of that level. And the market is retesting this level and trying to break it. Why I put this level? Because it was an emblematic resistance. And if I really believed that dollar yen was heading to the 115 or even the 118 in the next months, this level should be broken convincingly. The market, what I expect to do in the next 2 weeks is to maybe hover here for a while and then start moving up. And by the end of the month, close above this level. If for any reason something happens and make me change my opinion, not under stress or panic, we could consider closing the trade in a loss. If you open the trade and you are just not willing to wait that much, well, you can always use the sell at market thing. In this case, I would be closing it in a profit in this case, but I will wait. I mean, the real deal is going to happen on Friday. So on Monday, the next webinar, we will be reviewing exactly what to do with them. If I find something interesting or something urgent to adjust, I will let you know either through my YouTube channel or my Google Plus account. This is the other one. Payout dollar yen does not touch 111.50. I mean, this trade is pretty much already cooked, because for this market to touch the 100, and 111 and 50. I cannot imagine what should happen to make the market suddenly revert to that level. But again, this will expire on the last day of this month. This is because of the probabilities. It's plus 21.68% of the maximum payout of this, because of the probabilities are so in the favor of this outcome that is why we have this. Well, in my case, I won't close it now. I will just wait at least one more week to see what I do with these trades. The third one is dollar yen touches 115. Before the last day of this month, as you can see, we're very close to here. There's a major resistance between the 114.50 and 114.75. And the only way to break it is precisely having this kind of data. So I believe that maybe this trade should be closed in profit by Friday. But who knows? We need to wait because this could revert. If you're actually in some sort of trade, now you can close it here, as you can see, in profit. But again, just a reminder, this is not a warranted thing. Everything can happen, and everything could revert in one day, and we could lose. We know exactly how much we can lose. So this is the ultimate word in the game. No matter how deliciously a profit looks, that's not the real matter. What matters is how much you can lose, because a successful trading strategy is built upon risk management, not betting half of your account in 10 trades. That it's insane. That is betting. That is not trading. So always focus on your losses. How much could you lose? How much you are able to lose to make a responsible trading plan, to survive another day. Your whole account shouldn't be depending on 10 trades. That would be insane and irresponsible. The other trade is the payout will be received if by the end of the month the price is between the 112.50 and the 116. As you can see, is well inside that range, but we need to wait. This because of the probabilities. If I decided to close it now, I would be incurring a very slight loss. But since I believe, and overall after having today's fundamental news release by the United States, I feel even more confident of my insights than I was 1 week ago. So I'm not closing this. The other one is this. I opened this on 2 days ago. I commented this trade on my Google Plus account in March 6th. It was Monday. I opened it here, stating that I receive a payout if dollar yen is strictly higher than the entry spot at the close of the last day of March. As you can see, I open it here because I detected here a good support resistance that should be broken. In any case, I was correct. So it jumped above, tested it once, tested it twice, and then shoot up. So, well, as you can see here, if I decided to close it, I would be closing it in a profit, but I would let it run. I believe this was, yes, this is the same. The other one that I opened yesterday during my Spanish webinar is this one. When a payout if dollar yen does not touch 113 through the last day of March. As you can see, I open it here. We have this pullback, as I was just showing you in the chart some minutes ago, up to the 113.70, and that shoot up. So yeah, again, as you can see here, the probabilities of this trade to be at this moment to be closed in the maximum target are high, because of course the binary option thing factors in the probabilities of something happening or not. And in this case, well, again, As the same thing I was explaining in another trade, for the market to touch the 111.50, I couldn't imagine what should happen. This is not that far. This is a 113, but we're in the 114.6. Under normal circumstances, yes, you could have a pullback of 100, 200 pips during 2 weeks, yes. But under these circumstances, that is harder because this is a fundamental bias move. I was commenting this last week. These trades are opened with this duration because this is not a volatility trade, nor this or the others are based on a potential fundamental outcome that is materializing gradually every day and every day. That is why the market is moving in our favor. That is why I shared my ideas on this, because this is like something that could be explained, not something that, okay, just technically this is 20 down and I shorted it, but at the end there's not a real comprehension of what is happening behind. And I believe I opened this yesterday also. Received payout if dollar yen is strictly higher than the 114 at close of the last day of this month. As you can see, we had this pullback, but now it's well above the 114. As you realize here, I opened the trade just in a resistance at this moment, psychological resistance. Why? Because I was watching the daily chart. The same thing that I explained you, that it was a triangle being broken for some days to the upside, and according to the context that I was seeing, it didn't matter that it was a psychological resistance, because I concluded that it had the probabilities that I felt comfortable with, that resistance would become a support, and that it will continue its movement to the upside. Remember, a trend is nothing more than resistances giving up on the price action and giving way to more gains or more movements to the upside or downside. It depends on the asset that you're trading. That is a trend. When a resistance resists more, less than a support, then you are in an upward trend. That's it. So following that fundamental logic, this is how I open it. And this is another one. As you can see here, the payout will be received if it touches the 114.75. I really don't know. It says here, imagine, here the quote was 114.749. I was a fraction at 0.1 pip from having this closed in payout. But, well, what I believe is that this will continue in the next hour, so yeah. But it was just that single thing, 114.75. And we have already closed some trades in profits, if I'm not wrong. Well, it's only one. Is this one that was opened last week for payout dollar yen if it touches 114.50 through the close of this month. And as you can see, this price was hit at today. Here it doesn't say the time, but it was an hour ago or something. As you can see here, the payout was received, and this trade is already closed. For the ones that were following me last week, I opened a trade here in the binary.com margin forex account. That, by the way, binary.com is just introducing this MetaTrader 5 normal forex margin trading. So maybe I really don't know. Maybe for some of you it is not available yet, but for some of you, yes, you need to contact binary.com if you are interested in that. But the thing is that for the ones that were following me last week, I opened a limit buy order. In any case, last week trades really got, if we really had a pullback, the trade was meant to open at the 113, with a stop loss at the 111.50, I believe. But well, since yesterday the move was kept being sustained close to the 114, I just decided to close the trade, this limit trade here. Besides, I was explaining in the Spanish webinar. Yesterday, I opened a trade precisely saying that the market won't touch the 113 area in the next 2 weeks, 3 weeks through the end of this month. So it wouldn't make sense to have opened that trade and then here having a limit buy order at that level. So that is why I just decided to close it. So well, that is the update on the margin4xbinary.com account. I would like to thank everybody for being around. I really don't know how many of you, if any, decided to consider my insights last week and to develop your own trading ideas. I don't know if some of the information that was delivered here, that as you can see, I make the 100% of my efforts to make it high quality information. Could have helped you to get maybe in the right track on this in this occasion. In any case that you did, okay, now it's time just to wait to wait for the next 2 weeks. Of course, things could revert against us, but there's always usually the markets will always give you opportunities to rethink and to adapt. So in any case, that if you see that this goes completely against ourselves, etc., don't panic. You know exactly the maximum loss in the worst case scenario here. So that is, you need to be comfortable with that. The profits will take care of themselves when you follow the logic of watching the risk every single time. If something important happens overall after Friday, because after Friday, after the non-farm payroll number, usually the markets go nuts. And by maybe Friday or Monday, expect some kind of update through my YouTube or Google Plus accounts on these trades or any other potential opportunity that I track, that I find, etc. And well, that could help you get to your own trading ideas. Remember that I expect you all next week at the same time, same place. I would like to thank binary.com team for recording and hosting these webinars. And I expect you next time, next week, same time. I would like to thank everybody. Trade safe. This is Alberto Alvarado. This is WoW Trades. Bye-bye.